Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 1st of October. All right, as we head into the first of the month, let's just have a look where the majors ended up from Friday's trading. Now, the Aussie Kiwi were already sort of breaking down on Friday, coming through from Thursday. You see the Euro sort of also sort of tanking down through 116 sort of 90. Now, Euro has been a bit of a thorn in the side for probably the Aussie and Kiwi as well. They're sort of already weak on the impact from the US trade tariffs on China. But Euro, yeah, these currencies correlate with the Euro, and that Italian budget issue, which is still sort of simmering away, is putting further downward pressure on the Euro. And then we did also see some weaker CPI numbers come out of Europe as well, and that sort of led to that sort of really dipped out to the downside. Now, we're seeing it come back to 116.20, but you know what? The market's just feeling it out coming into Monday. Sterling, well, once again, there's, Brexit keeps coming up in the news. I haven't seen anything tangible to say, well, it's negative or positive for that matter. So sterling, once again, sort of just drifting back into a sort of a negative sort of phase following the Euro. Now, we did have slightly weaker UK GDP numbers, the final numbers, but they're only like just a fraction. But it shows you how sensitive the market is at the moment. And with that strong dollar sentiment running through, I mean, I called it up straight after the Fed meeting last Wednesday. It'll take about a day for it to sink in, but the Fed are raising rates, and this is a new cycle of interest rate hikes in the US, and they're starting to see this impact a strong dollar, especially on dollar yen. That's just shooting for the top side. Now, to buck the whole trend, of course, you always need one. Dollar CAD. Now, technically, hourly, daily, and weeklies, to me, it's broken down. We have had slightly stronger GDP numbers out of Canada. Follows the stronger retail sales figures. But the big move here is all about NAFTA, right? There's a lot of talk about potentially Canada being very close to signing a NAFTA deal, and that's seeing a positive move on the CAD, right, which is countering the whole US dollar move. So just be aware that if you think you're going to get long dollars against all these pairs, well, you might want to think twice, especially about dollar CAD. Now, just to match up where these current major currencies are, you need to come back and really check, see what sort of data came out on Friday, just to sort of make sure the currency pairs matched up with what they had. Now, this is what I was talking about. So when you're looking at the various pairs now, just get my pen on, just look at the GDP numbers. I mean, with GDP, it's such a big number. You don't need much variance to get some sort of impact. Sterling was already sliding to the downside. And those numbers there, you got these business investment numbers also weaker as well. Traders will jump on anything if it goes with the current flow. So those slightly weaker UK GDP numbers, a bit of a cause to why sterling went lower. Now, the flash numbers, there's a couple of different flash numbers here you need to be aware of too. Now, you got the overall total. Now, that came out as expected, right, 2.1%. If you take out energy and unprocessed food, for example, it was weaker. And then you take out some of the other key factors, and it was weaker as well. So that weaker sentiment. Now, once again, the same as sterling, okay, Euro's already sliding lower on, potential issues with Italy, with them sort of trying to change their budget in a different phase to the rest of Brussels, the ECB. So that's causing a negative downside. So any sort of weak numbers here really does come into play. And then you have the US numbers, personal income slightly weaker, the whole consumption numbers pretty much as expected. And there's your slightly stronger GDP numbers there in Canada as well. So it just goes to show, when you've got big numbers coming out, small variance means a lot, right? This is one of the key things you need to understand with the fundamentals. So just coming back to, now we've seen the major currency pairs here. Let me bring you across to what the US dollar or the US dollar index is doing. Of course, Euro is a big part of this, 58% or 57.8%. So, Euro going down also correlates with, or coincides, I should say, with the positive hawkish Fed tone. Okay, 3 interest rate hikes already starting to be factored in for 2019. So we've got a strong dollar. Then we've also got a weak Euro, and that's where that big move has come in the dollar index. Now, it does seem to be stalling at this stage, maybe we've reached fair value for the moment. The dollar one just trading sideways. Now it is a holiday in China and it's a holiday in Australia as well. So there's not a lot of trading activity just at the moment. And that's where we are with those pairs. Now, what I wanted to just show you is there's a couple of key things to take out of Friday. Now, just coming into the MyFX Trading Hub, one thing still simmering away, and I haven't changed this for some time. Geopolitics are still overshadowing some of the major moves. The move down in euro is geopolitical. Okay, the move down in dollar CAD is geopolitical. The move in sterling, or the moves in sterling, have generally been around Brexit, another geopolitical issue, and the US-China situation is still leaning on Aussie and Kiwi. So, you know what, we're not really seeing clear markets as such, although we are seeing the positive Fed sentiment come into play. Now just coming into today's markets, as I said, Australia and China are on holidays. We've got some UK manufacturing data to really kick things off and some ISM manufacturing PMI. You might want to check that out. That's a really good starting point, especially with the way the dollar's moving. So but one of the key things now, just taking out of this, now there is a fair bit of geopolitical action in this. I've already mentioned NAFTA, but we have seen dollar CAD bucking the dollar trend here, right? The US dollar has stepped aside. Oil has already been rallying. We've got NAFTA. It's broken down. We've had some slightly stronger Canadian numbers, which falls into line with the hawkish tone of the Bank of Canada. So everything pointing to a lower dollar CAD, or a stronger CAD if you want to look at it that way. Now, and the other pairs at the top here, still conflicting. Like technically, yep, sterling's going down, but fundamentally, the central bank's been backed into a corner. Inflation's through the roof, so they're going to be looking to raise rates. So that picture doesn't make sense, and that's why I've got sterling sideways. But technically, it is breaking down, and that's what euro, the Aussie, and the Kiwi are doing there as well. All right. Now, one thing to note. Now, so just coming into Friday's trading, I did post these orders in the trade zone for everyone. So we had two opportunities here. Now, this is a really good example of really optimizing the pairs that you can trade around the numbers. Now, the CPI flash numbers, once again, we can't put all the numbers in there. So I was focusing on the total number as the lead indicator, but of course, there's a couple of number releases at the same time. If we got weaker numbers, okay, it was going to be Euro Aussie would be the pair to trade. If we got stronger numbers, I was looking to sell, but it was going to be Euro. Okay, so this is what you're doing is when you're looking at trading opportunities, and say it's on euro, you are looking across the board at all the euro crosses and euro against the dollar and trying to work out where's the best trade here. And as it turned out, if I just give you a bit of a quick look here, let me just come back across. I'll just show you the impact. I mean, it's a really clean opportunity. Okay, so this coming into the euro crosses once again. So taking time to isolate the best pairs. Now, what we saw with those weaker euro numbers, it's a good case too, because Aussie's sort of just drifting sideways. We had the weaker numbers, so I moved down through 160, 130, which was our entry level, out at 160.55. It didn't even hardly touch the sides, and then start to trade sideways. So once again, this is just a bit of a precursor. All I want to highlight is the best trading opportunities are not always just on the straight up majors. Okay, so you have a look at the at euro itself. If I just come back to, let me just change that up. Come back to the major pairs. If you have a look at the opportunity on euro itself, now euro had already sort of broken down. So to me, it was in a bit of no man's land. Now those weaker inflation numbers did of course impact, but trying to isolate the entry level around the time of that release is a bit hard on euro against the dollar, as it was. We had a really nice technical level on Euro Aussie. All right, so that's just a bit of a heads up. Make sure you do, say, a small amount of homework to work out where the best technical entry is on some of these pairs. Now, just coming back into, now focusing on the week ahead, right? So we've got a pretty solid week of data coming out. It's the start of a new month. Of course, non-farm payrolls will be the major focus for a lot of media as we move through the week. As I said, you've got some nice manufacturing numbers to kick off the week. Tuesday, we've got the RBA. Now, they've been talking about rates going up, but tell you what, it's a pretty tough call, and it's a bit of a line baller. So I don't think there'll be any changes in interest rates in Australia, but we may, it's even a big call. As I say, we may see a change in the statement, but they've been pretty neutral the last 12 months at least. Sterling is going to have a big week, right? So you can focus on this already. You can see where the ducks are lining up here. Of course, Brexit is our nemesis. Manufacturing PMI, construction PMI, services PMI, and then you throw in the US numbers there, the ISM and the non-ISM, or the ISM non-manufacturing, I should say. And then you come down to, once we get into Thursday's trading, things will slow down somewhat. We do have some good numbers out of Australia, which is, we're going to attack the Aussie there, and the Aussie crosses with those Aussie retail sales figures. And then you've got the, unfortunately, the Canadian and the US numbers coming out at the same time, but the non-farm payrolls will be the major deal here, right? So as you come through the week, understand that this event at the end is one of the big head kickers. So the market focuses on it somewhat. It's a good idea to probably really sort of bounce around sterling and the sterling crosses, because they are going to be pretty active with 3 key releases coming out this week. All right, now there's one actually thing I've just noticed over the weekend. I mean, I saw it on Friday, and it was always going to be something to keep an eye on. So you come through the Friday's trading. Now this is one. It's always been one of the major issues that a lot of regulators, I guess, as much as banks, have had with China. Now we've had some the NBS manufacturing PMI, and then the Caxton manufacturing numbers there as well. Now look at these 2 manufacturing numbers; they are weaker, right? So this, I'm a bit surprised we have not seen a major flow-on effect. This may be because of the Australian holiday, but I would expect Aussie and Kiwi to start falling here, because these numbers, this is like the start of those trade tariffs starting to impact China. Now, to me, that's a big negative. Aussie and Kiwi are just trading sideways at this stage, but they are, I'm starting to think, I'm looking for levels to get short of those pairs at this point. Now, the Tankan numbers, historically probably the biggest numbers in Japan, slightly weaker. Okay, so you've got these weaker numbers. To me, that's a move down in dollar yen. Okay, the Nikkei sort of drifting lower, but what we're seeing with that strong dollar move, we are seeing the dollar yen cruise to the top side. So there's a couple of little things to sort of keep an eye on here. As I said, just coming off that data there. Just come back to this. So the Aussie, I mean, it has sort of rallied. It's trading sideways. I think these weak China numbers are a good opportunity to be selling. I'm going to be keeping a close eye on this and try and line up some entry levels, not just on Aussie against the dollar and the Kiwi against the dollar, but also those crosses, because they should start to feel a bit of pain. We may even see Euro Aussie come back somewhat. But and here's dollar yen sort of bucking the trend. It's just strong dollar all the way. It's, technically hourly, daily, weekly charts, it is cruising to the top side. And you look at the, if I just bring you back across to the sort of the dollar page that I've got set up here, just having a look at the equity markets. Okay, equity's up. Now, this is a little bit bucking the trend, because, as I said, I think those weaker Japanese numbers, lead to a weaker Nikkei, but we're not seeing that at all. Now, there's a lot of euphoria at the moment, as you can see on the news pages here. Canada and US have reached agreement on a framework NAFTA deal. This is dominating most of the pairs. The CAD is a bit all over the place. So you want to keep an eye on this as we come into the European and North American sessions. All the news is going to be about NAFTA, right? And that could push the US dollar around all over the place. But at the moment, it's a very big positive vibe going through the global markets. It's one of those big uncertainties ticked off, right? And that's a good thing. So what we're trying to do is isolate all these geopolitical events. We've got until March next year for Brexit. But obviously the US-China situation is another major situation that we need to be keeping a close eye on. And if we come over to the major news pages, almost forgot to give you the update on the news. So the Canada, the NAFTA deal is the major news. Now, these are random sources, but the way the Canadian dollar is moving, you'd think it's probably spot on. It does look like they have come down to a framework deal, and that's what the market will be looking for confirmation of once it goes through. The rest of the stuff, it's like strong dollar. I mean, fundamentally, the US economy is the best performing economy. It should be stronger. And then you've got, the news services will bring up the various bits and pieces. Brexit for sterling, and Aussie and Kiwi nurse losses as yields favour the US dollar. Well, tell you what, it's all about dollar yuan. I know it's a Chinese holiday at the moment, but those weaker numbers on Saturday, Aussie and Kiwi, are going to feel the pinch as we move into the week. So that's where we are, guys. That's the start of the week. I always use Monday as a real give the markets a chance to reconnect. There's no need to run in when there's less liquidity in the market and there's a bit of uncertainty. It's a good time to redo your trend lines and see where these currencies are going, especially try and find out where the next best trade is. Okay, at this stage, to me, it's a little bit uncertain on the majors because they've already sort of broken down and they're all over the place. So you know what? The next best trade to me, it's going to be on the crosses and focus on the pairs that do have, potential momentum shifting numbers. And so that's where you come back to the calendars and you start to focus on the upcoming events. All right, as I said, Monday, UK manufacturing, US manufacturing PMI, ISM manufacturing, probably the key two numbers to focus on for today. All right, guys, that's it for me. Have a great week. Have a great month. It's always an interesting one with non-farm payrolls. I think we've got some good dollar movements still to come. So keep an eye on the charts and see if we can nail some of these opportunities. All right, guys, have a good week. I'll catch you in the live trade zone. Cheerio.